Markets have been anticipating the Fed minutes almost as much as I've been eagerly awaiting stuffing. Let's discuss this with Quill Intelligence CEO and Chief Strategist Danielle DiMartino. Booth, nice to see you. So we want to talk about these Fed minutes real quick. Do you have any reaction to the mortgage rates continuing to fall, in fact, faster than they have since 1981 on a two-week basis? Will that change the calculus in your estimation of the Fed?
So actually, we ran this data today since you bring that subject up. And if you look at the top 10 moves in mortgage rates, this is the sixth largest that we've seen in a two-week period. Unfortunately, the other instances, the United States economy was in recession. In other words, it's great that mortgage rates are coming down, but typically when they come down this quickly in recession, as is the case today, you don't get the same reaction that you would if you were not in recession, because people are losing their jobs. So there's a big trade-off here. You cannot qualify for a mortgage if you don't have an income.
I mean, so it's getting incredibly hard to try and decipher some of this data. Obviously, some people say we're already in a recession based on two negative quarters of GDP growth. Others are sort of factoring the stickier parts of inflation in here. How should homeowners be viewing this period then?
I think homeowners are correct to be reticent about buying into this market. It's obvious that the home price declines have just started, and you're only really seeing strength in the most affordable housing markets in the country. And you're seeing the air come out of the bubbles of some of the post-pandemic hot markets like Austin, Boise, Idaho, for example.
All right, let's get now to the Fed minutes. What was the most important thing you read today? And anything surprise you?
You know, I think the most important thing that we can glean from the minutes is that Powell is prepared to continue being the hawk that he's been, but because there's only various members of the committee who believe the terminal rate, the final rate at which the Fed stops hiking, should be higher, whereas a vast majority seem to be of the opinion, this is what we get from the minutes verbiage, a vast majority are more in the camp that says, you know what, we've got to pause or slow the rate. It looks like Powell's going to be increasingly fighting a lonely battle. And we'll obviously be hearing a lot more from him when he's up on the Hill a week from today.
And that might be why we also saw in the minutes that the Fed officials agreed on the importance of lags and cumulative action over that fear of sort of going too far, too fast, and really giving time for the medicine to actually work here. Do you think the Fed is already going too far, too fast?
I think certainly the reaction that we've seen in interest rate sensitive sectors would suggest as much. That the Fed has indeed done damage. We saw today, for example, a headline that a furniture manufacturer closed abruptly, fired all 2,500 of its employees just before Thanksgiving. So this is no longer a situation where it's layoffs that are isolated in Silicon Valley tech companies that overhired. You're actually seeing the damage ripple out into the broader economy from what the Fed is doing, slowing housing. Obviously, it's going to take a bite out of things like furniture that you would buy if you were moving into a new home.
Yeah, we got HP news yesterday. They'll lay off around 10% by 2025. So the market's pricing in a 50 and then a 25 and a 25 and then a pause. Is that what you think will happen? And how long will it take them to get inflation back near their target of 2%?
So I do think, if you look at the co-movement of used car prices post-pandemic, there was a correlation of 0.83. That means that they were almost moving in lockstep. We're seeing that reverse just as quickly, as well as other areas of discretionary spending that you would see slow in a recession. So I do think that a year from now, we're actually going to be talking about disinflationary forces and having seen prices come back down too quickly. Believe it or not, I know it's crazy to think about in this environment when everybody's talking about how much their Thanksgiving turkey cost. But again, there are major forces that are pushing prices downwards. We're seeing this in some of the regional Fed surveys as well.
Certainly a delicate balance, trying to get just the right balance here. Danielle DiMartino, Booth, thank you for joining us so much this afternoon, and have a great Thanksgiving.
Thank you. Likewise.